The market is currently in a tricky spot. BTC is directionless between key trends, alts are struggling to hold key levels, and we had the highly anticipated World Liberty financial launch to mixed reactions, which we'll cover later in the show. But before we do, make sure to hit subscribe and turn on the notification bell below to be notified of all future videos. Right, let's jump into it. So on the daily time frame for BTC, these are some scenarios I'm watching right now. You can see we have this stacked pocket of equal lows down here at 107,500. I'm kind of looking for those to be run down into this key POI at weekly demand plus the daily FVG I have been covering. Some people have been asking what an FVG is. It's known as a fair value gap or just an imbalance in price. Basically, when you have a very impulsive move like this candle here, you can anticipate that many orders got left behind. Now for price to seek balance, it generally comes down and looks to fill those orders before moving in the direction chosen. A few of the scenarios I'm watching right now, it's kind of diddling in the middle for me. I don't really have much read on where price is going. Obviously today has had a nice push up, but really the bullish and the bearish line in the sands for me. Effectively, the bullish line is closing above this market structure break plus support resistance level. So that's up at around 112,500. Now, what I really want to see from a bullish perspective is to get above this and also get above the daily trend, the daily Noodle here. You can get that in the Miles High Club, link in the bio if you want to check that out. So effectively, yes, just looking for this. Until then, I think this potentially offers maybe a short opportunity as well. So acceptance above that level is where I will flirt with the idea that we can potentially come up and tag all-time highs again. But until that point, I think this money noodle, this daily trend here is going to offer resistance as well as this support resistance level we have in the red here. So effectively, I'm looking for a push up. Maybe if that gets above, or maybe shows some sort of low time frame bearish price action, potentially looking for a short down to take out these equal lows. The inverse scenario for that is maybe we chop here and we come down and take out those lows first. But you can see right now what I mean about diddling in the middle. There's nothing really for me to do here. I think the acceptance above that 112,500 level is where you look to do business, because that's obviously the daily trend, which has been good support on the way up. And obviously once we lost it has been, bearish resistance on the way down, each bearish retest, I should say. So effectively just looking for that, and that would give me a bullish bias to target these highs. If we don't get that, I'm looking for this scenario here, scenario number 2. Now that is a run of this equal low pocket over here down at 107,500. And one of my favorite setups is kind of a sweep of equal lows or just a liquidity pocket into a high time frame demand. So you can see here, if we go to the weekly, I've marked this out. This is a weekly demand level. So it's a weekly demand level here, and it also lines up with the weekly noodle, which we have been discussing a lot in the past few videos. So you can see the weekly noodle has been excellent support since 2023. We've never closed a body below it. And every time price has got there, it has given us a very nice move up into fresh highs. So really what I'm looking for with this, I'm looking for that weekly tag, right? That's where I want to do business, around 104K. And it could potentially go lower, which we'll get into in a sec. But that 104K level for me is where the weekly noodle starts. Now, if you actually look at what happens when we tag the weekly noodle, it hasn't been as easy as one and done. It's not just like we tag it and then we push up. You can see on each of these tags, we actually spent a bit of time in there. So back in 2023, we spent 42 days in there on the retest before pushing up. Then again, we retested it, never closed below it. We spent 63 days there. Right here, when we tagged the noodle for the first time in 2024 on the weekly, we had 105 days of chop and consolidation before pushing up. And once again, here on the most recent tag, we had 56 days. So I don't just think we are in for a sweep into it and then we push to new highs. I think if we get there, we may spend, considerable time chopping. But as long as that is held and we don't actually close a body below it, then I'm completely fine to use that as my high time frame swing barometer and also picking up spot positions. So if I flick back to the chart we started the video on, you can see that weekly demand pocket I have mapped out, which is where the weekly noodle is down at that 105K level, down to 104. I actually like 104 a bit more because we have the stacked POIs now, the points of interest. That is the weekly demand with the daily FVG within it. Now an FVG, for those who don't know, because I get a lot of comments about it, basically look at it as like an imbalance in price. So when price pushes up and has these very big impulse candles, you can anticipate that orders got left behind there and weren't filled. Now the market likes to seek balance, so you can effectively think that if these come down, these orders get filled and price can push back up in the direction intended. So why I like that level right now is because it lines up with that weekly noodle. So if we get the chop in there, like I said, we may chop for a considerable period of time. I don't think we just V-reverse out back into new highs. There is potential that we chop in here for a while, but what we can do with that is look for confirmation. Now the confirmation would be some sort of reclaim of this low pocket here. I think if we chop down here, you can effectively, stay on the sidelines if you want a bit more confirmation, and you can look for a reclaim of this 107.5K level here before pushing up into potentially new highs, but we would have to look at resistance on the way based on this structural low here. So based on all of that, you can see why I'm not looking to position into anything just yet. I'll position higher on confirmation confirmation above that 112K level. If we get that, it means this was probably the low and structure is starting to shift. But if we don't get that, I'm looking for that push down into this level where I'll look to be a buyer. And I think you can actually take your time with buying around this region. Once again, as I went over, I think it potentially chops there. So based on all of that, this is why I don't really have any need to get into the market right now, and why I think we are, potentially directionless. And what I mean by that, we're currently under the daily trend, and we have not yet tagged the weekly trend. So for me right now, it's hard to make any buys, but I think these are the levels you want to be watching. Now, skipping over, the third case I'm looking for right now is on the monthly chart. So I know it's a high time frame, but we need to pay attention to the POIs and sort of what's happening with the price action. So you can see the monthly just closed as a bearish SFP, a swing failure pattern. Price tried to swing high, but couldn't do it, and it led to a sell-off. When we're getting sell-offs like this, we kind of look for rotations. So we had, an SFP here back in February 2025, and you can see that led to a considerable sell-off lower before printing an SFP at the lows for pushing up again. So what I'm looking for right here is potentially this SFP to play out by coming down and sweeping this key low at 98K into this monthly FEG. Something like that before pushing up would give us still the higher low on the monthly chart. Now I know that may seem considerably lower than where I marked out, but the key thing to note is why we are looking at that level is this level right here, this red line, this 98K low. So if we go back to the chart I was just mentioning, you can see on the weekly, the key low we are watching down here would be a very nice liquidity grab, and why we're looking for the inverse to happen of what happened up here. So this is effectively that monthly SFP, is also a weekly SFP, which is marked out. Now, if we want to see some sort of good rotation like we did on the previous chart, where we have this higher high, higher low scenario, you can see that SFP that happened in February 2025 led to another SFP at the bottom before pushing up. So if we go back to this chart, we've printed this SFP up here, and the next one is down at this 98K level. So this also is the lower bounds of the money noodle. Now we can see time and time again, when it has tested the lower bounds of the money noodle, they've just been wicks below, but they've never quite closed there. So I think what makes for a very interesting prospect and the highest RR opportunity for picking up high time frame swing positions and spot is a run of this low down here and a reclaim of it before pushing up. So why I am looking for the 104K area, the 105K area, the weekly demand level, which we mentioned, I think that's sort of my midterm outlook, but I think in terms of the greatest buy we can get, it will be down at that 98K level. And effectively what I want to see, as said, is a sweep of that and a quick reclaim. I think a quick reclaim of that, this would print as a deviation, and then we can look to position on that reclaim to target potentially all-time high and new highs. So flicking across to Ethereum, you can see we did the same thing. We printed a new all-time high, but it actually ended up closing on the daily as a bearish SFP, and we have since sold off. If you followed the last videos, I was also talking about that triple divergence across the awesome oscillator playing out, which it has done. You can also see the RSI is sloping down and losing momentum in line with that, but it has actually reset on each 50 retest. But also, this was indicative of why I said I wasn't looking to long Ethereum and why I was taking profit on it earlier. So based on where it is right now, if we just flick to a line chart, you can see we've made a high, a higher low, a high, high, and potentially this is a higher low again. Once again, better structure than BTC. But I think the interesting setups kind of lay here, and we'll go down to the 4 hour in a sec. I think that psychological 4K level, we've been over this many times now. If we go to the weekly chart, you can see that is like a high time frame weekly resistance that we eventually broke through. I think what would make sense is a very nice retest of that, and that would line up with kind of sweeping into this weekly demand pocket here. So this is one setup I'm watching, and this is, like I said, with BTC being 98K, the highest RR opportunity for longs. I think this down here between 4K and like 38K, anywhere in this weekly block, is a very good opportunity to pick up some spot on this or take higher time frame swing positions. Now, altcoins will obviously get puked pretty hard if that happens, but I think a lot of them will come down to very attractive prices, especially strong runners that we've seen over the past few weeks to months. So similar chart to BTC, this is on the 4 hour though. We have this pocket of equal lows over here at 4,200, and we also have this market structure break level up at 4,500, give or take. So for me right now, I'm looking for two things, basically more from an intraday trading perspective, because I think it's just an intraday trader's market right now. I think we puke down into that 4K level, that weekly demand block. That's the highest RR opportunity, as I said. But I think in terms of just local price action, I'm looking for either a sweep of this, some sort of sweep or a deviation. So maybe we come down, we trend under here for a bit before reclaiming that. That reclaim would be my trigger to go long. My other inverse case is if we can push up above the 4 hour money noodle here, the 4 hour trend, and get back above this market structure break level at 4,500. Now, if we start to do that, I'll effectively say this is the bottom for now, and we can play the local price action up to potentially all-time high again. but I think the 4-hour Noodle is going to add some resistance. I also think this market structure break level won't just flip like that. So this one's a bit more difficult for me. What I ideally want to see is a run of this liquidity pocket, these equal lows. So until we get that, I'm a bit sort of hesitant taking any positions here, hence why I'm not really trading this. I think this is just choppy and will remain choppy for a bit. This SFP of the lows here, this sweep we had, looks pretty decent for now for a local push up, but I still think that 4,500 level is going to offer some resistance. Now, covering Solana, as we went over it as the main thesis for my last show, you can actually see that there was no trigger to take a position. So the whole premise of that show entirely was we were looking for the monthly to close above this monthly resistance, which it did not. Basically formed an SFP as well. But I think in terms of local price action, the daily is looking quite good. So it's just trending up the daily trend and is now compressing back into that level. I still think there is a rotation on the cards. I just don't think it's here yet. I think right now with this, I'm not going to wait another month, but if we get a really nice weekly close above this level, or we even get a daily close above this high here at 218, I think that'll give me a bit more credence to treat this as breadcrumbs for a move up. At which time we'll start looking at the Sol BTC chart, the Sol ETH chart, Sol dominance, all of that. If we start to see that rotation shifting back in, then I think this will make for a very nice trade. Now, Pump is a coin that I think looks the best out of Sol betas if we just flick to alts quickly. This structure is very nice. You can see we swept these key lows down here at 0.002595 before pushing up. And this is my line in the sand right here, this line at 0.0037. A high time frame pivot point. We also have this daily supply here, which we're starting to close through. We've just eaten all those orders up. So if we start to see acceptance above this level and we start to trade above it, then I'm going to look for a position, not targeting new highs, but just sort of scaling out on the way up. Potentially these highs over here make for a very nice first target. And we can also look locally for a closer TP. So those highs up there were at 0.0046, and these more local highs are at 0.0041. Now onto World Liberty. This was such a highly anticipated launch. So we actually had the spot market launch on a US holiday with more tokens in circulation than expected, which obviously dampened the early hype of it. I think we had like 20% of the unlock happen at listing, which led into the selling. But from what I can see here, it's actually at a pretty good point. So many traders see the 0.2 level as key support because that's where funds first bought in. And you can see actually when we came into it overnight, we had a very nice tag of it before pushing up. So this is a fantastic level that was defended. And I think right now, all we really want to see is some sort of reclaim of this level up here at 0.26. Now we do that, we've effectively shifted structure by reclaiming that low. We can treat this as a deviation, but until that happens, we can kind of expect maybe this chops between there. Maybe we come down and get another opportunity to buy that. But I think kind of anywhere in this zone is actually pretty decent if you're expecting higher prices on this. If I was buying around 0.2, my invalidation would simply be losing this level down here. Now, I really like these sort of setups because if you buy as close as possible to the invalidation, then it's only like a few percent haircut if we start accepting under that level. So potentially maybe we bracket in here for a while, but if we do start coming down here and accepting under that and fail to get above that level again, then you can cut your position pretty easily with not much of a percentage loss to your position. Where it becomes a bit more difficult is if you're trying to front run some sort of breakout of this level, buying into the highs, only for us to deviate in that and reject back down, then your RR is diminished substantially if we start to lose this low. So I think you can obviously dollar cost average in this area, but I think try to buy as close to these lows as possible if they're revisited again. Failure to do that, maybe we come up and consolidate below this 0.26 level with a nice thrust candle above it. Now if we get any sort of retrace back, you can consider this as acceptance above, and that's where you're trying to buy this level for a move up into these highs. So that wraps up my rapid fire market outlook on this very fine Tuesday. If you want to get access to the Money Noodle, which I've been using in all of today's analysis, link in the description for the Mars High Club. And also do not forget to hit subscribe and turn on the notification bell for any future videos. And with that, I'll leave it there and I'll be back in a few days. Cheers.